What's up everyone? Welcome back to the channel. Today I was looking over some articles on what the best stocks to buy in 2022 right now. This is the October 1st edition, so right now, I don't know when you're watching this, but anyway, I wanted to go over a couple of these stocks myself and look at kind of what the financials are showing for some of these stocks. And while I'm not a financial advisor, I'll put in my input. At least we'll do some research, and you guys can look into this more if you want to buy them or not buy them. However, I thought it'd be kind of a fun video. So the first thing I noticed, it says best stock to buy this week, 10/1/22, and it says Costco. And what I think is interesting about Costco, the PE ratio is 35.94. So that might be a little, trading a little rich. It is down only 16.6% this year. However, what I think about the PE ratio of 30, almost basically 36, that is way more expensive than Apple, and Apple is 22.84 right now. And in my opinion, Apple has more room for growth. Therefore, I would expect Apple to have a higher PE ratio than Costco. But anyway, I'm going to get back to the article. So in the article here, I found the top 10 stocks to buy right now. I'm not going to go through all 10. I'm going to go through 5 of them, plus a bonus one at the end. Anyway, in this list here, it has Ford, Alphabet, which is Google, Qualcomm, Salesforce, Palo Alto Networks, Walt Disney Company, GXO Logistics, Boeing Company, Mercado Libre, and the Goldman Sachs Group. Comment down below if you guys think any of these stocks are a buy. I'm going to go ahead and go through a couple of them. I'm going to go through Ford, Google, Qualcomm, Walt Disney Company, Boeing, and the bonus is actually going to be DraftKings because Walt Disney lost some money on them on their finance statement, so I went ahead and pulled them up too. Alright guys, so I got Ford pulled up here. Ford is trading for $11.20. I actually owned Ford probably about, I don't know, 4 or 5 years ago. I got out of that position. As you can see here, I'll go to the 5-year. They're pretty much stagnant. It was $12.31 then. It dropped a lot, and anyway, it's $11.20 now. It did make it up to $25 at one point, but I don't see them growing. I know they're getting into the EV market and stuff. Maybe they'll do well. I'm not saying they won't. The main reason I got into Ford originally was actually their dividend yield, which right now is 5.36%. So that's a pretty healthy dividend yield, especially for a company that I think will pay the dividends. Their PE ratio is 3.9, so potentially very undervalued. And let's see, the market cap is 45 billion. You can see their 52-week range is 1061 to 2587. So here I am at the Ford Investor Relations page. I actually have the income statement pulled up here. You guys know that I love the net income/loss section. Comprehensive income/loss attributable to Ford Motor Company. So let's do the second quarter, so that's the trailing 3 months. So you can see the second quarter of 2022, they've actually lost 512 should be $billion. And second quarter of last year, they made 663 billion. I understand the consumer is a little weaker now. However, I personally, Ford is such a big company, I have a hard time buying into a company that's losing money on the bottom line. They've been around for so long. If you guys are more interested in Ford, you could look more like what maybe they're spending more money on the EV part. I'm not sure, but I personally would have a hard time putting money into Ford stock again, unless you want to do a dividend play on them, because that 5.3% is actually pretty nice. However, anyway, look more into this company if you guys are interested in Ford. I personally am not, and especially with this income problem here, this net income problem. So the next stock we have pulled up here is actually Google or Alphabet. They also own YouTube, so thank you very much, Google. We appreciate you. Anyway, right now you can see this. They have different class shares. I just have this one pulled up here. Anyway, it's 96.15 right now. You can see the PE ratio is 18.22, so that's actually trading a little bit pretty good spot for Google, in my opinion. Up roughly 14 to 16 is kind of market normal. So typically if you're under 15, it's like a really good value potentially. However, I still think Google is going to grow a little bit, so I don't mind personally paying a little more PE ratio for them. So you can see their 52-week range, they were at 96.03, which we're basically there right now, and the high was 152.10. And you can see the market cap is $1.25 trillion. And Google does not pay a dividend right now. So as you can see here, I'm at the income statement here. If you guys ever want to look at these things, just type in Google Investor Relations or whatever company, Investor Relations. The first thing pops up will be there. Just try to find their income statement or their any of their finance sheets that'll pop up there. They also sometimes have slides you can look at, which are maybe a little easier to understand, especially if you're looking at growth and stuff. But real quick here, you can see Google. I'm going to do quarters for all these, so just the last 3 months. So we have quarter ended June 30th of 2022. They made $16 trillion, and in last year at the same time they actually made $18.5 trillion. So they haven't made quite as much. However, they still made $16 trillion. So I'm pretty excited about that. I actually don't own Google. However, with the PE ratio and everything right now, that's actually looking pretty good. I'm personally going to look into this company a little more, and I might actually add into this position. Again, I'm not a financial advisor. I'm not telling you guys to buy Google right now. Look more into this company, see if you like where it's going, and make your own decision. So the next company we have here is actually Qualcomm. I do not own this company either. And anyway, we'll kind of look at the stats here. So you can see right now it's trading for $112.98. We got the 52-week range is $112.92. So we're 8 cents off the low. It was at $193.58 prior to that, or at the high. The PE ratio is 10.01. So again, that's very low as far as the average. So this could be potentially a very good value as well. You have the dividend yield of 2.66. So here we have a lower PE of 10 as well as a dividend yield. And we're also towards a 52-week low. One more thing, the market cap is $126.8 billion. So this is a company I don't know that much about. So when I click on their investor relations page, I'm going to look through a couple things here and I'll share that with you guys what I find. So if you click down here, you have the third quarter fiscal 22 highlights. It'll kind of, you can read through these things, and it looks like they're going to have an automotive investor day. So that'd be interesting to look at. So this would be a good slide if you don't know too much about a company, like what all they sell. You could look through the income statement as well and the balance sheet. However, the revenues here, it says handsets, so 6.1 billion. And you can read over here, it says revenues on track to grow slightly below 50% year over year, driven by increased processor content per device. And we have, let's see, RF front end, expanding solutions beyond smartphones, next generation Wi-Fi, Bluetooth, RF front end modules. So $1 billion in there. And we have 350 million in automotive. It says design win pipeline, 19 billion on continued traction design wins across global automotive and tier one customers for Snapdragon digital chassis. That's something I don't know anything about. So if I were to start buying this company, I would look into that and kind of see what I think about whatever Snapdragon is. I think something important is to never act like you know everything. I don't know much about this company, and I don't mind saying I don't know what Snapdragon is. That's okay with me. I can look into that later, but I think it's good to know what you don't know. The last thing we have here on this strong growth, this revenue streams thing here, we have Internet of Things, 1.8 billion. So it says on track to deliver Windows on Snapdragon compute platforms for next generation PCs. So now I assume that Snapdragon is some type of computer hardware or software. Let's see, powered by our custom CPUs while redefining mobile productivity and on AI. I also understand it might be some type of GPU or something. So like I said, something I'll look into more. So as I'm scrolling down here more, it says IoT, which I believe was the internet. It says revenue stream. They have consumer, they have edge network, and they also have industrial. So these are just other good slides to look at if you're not sure that much about a company or before you're going to invest in them. Just see what all they're getting into. So on a quick Google search, I got a list of Qualcomm Snapdragon processors. So just real quick, Snapdragon system on chip products typically include a GPU, GPS, and a cellular modem integrated into single packages. It says it operates graphics, video, picture taking. I'm sure it does much more, but now I have a quick idea of what it is. And now I'm back at the investor relations page, and literally I could have just seen that right here. Anyway, this is literally what I do if I'm going to look at companies, guys. I make sure I kind of know what's going on with it. And as we can see here, I'm back at their investor relations page, and this time I'm on their balance sheet. So I have net income, the last 3 months ending June 26th so this year, 2022, they made $3.7 billion. Last year they made $2 billion. So they are increasing their net income right now. So this is definitely a company I'm going to look more into. They have a lower PE, they have a dividend, and they're increasing their net income. Next company we'll look at is Walt Disney Company. Everybody knows Walt Disney. We got all the theme parks as well as Disney Plus and all these other products they have that we'll look over here soon. And anyway, that's real quick. The stock is trading for $94.33 right now. You can see the 52-year range is $90.23, so we're just barely up off the bottom of that, off the low. I'm not going to call it the bottom, the low. And the highs of the 52-week was $179.63. The PE ratio is 54.84. If you guys think that Disney is a growing company that may be worth paying for, we'll look into that a little bit. And let's see, the market cap is $171.9 billion, so basically $172 billion market cap. So here we are at their income statement, and if the CEO or the CFO ever says something, I usually read that. So we had an excellent quarter with our world-class creative and business teams powering outstanding performance at our domestic theme parks, big increases in live sports viewership, and significant subscriber growth at our streaming services. With 14.4 million Disney Plus subscribers added in the fiscal third quarter, we now have 221 million total subscriptions across our streaming offerings. That's pretty impressive. So maybe that does command that higher PE. That's something for you guys to figure out. So something I found interesting on the income statement here is you have net income was up 53% over the last quarter, or the last year's quarter. So 1.4 billion this year compared to 923 million. However, their free cash flow is 187 million this year compared to 528 million last year. So that'd be interesting to see if we can figure out where that came from. Like, basically, if you make more net income, you should have more free cash flow. So we need to figure out where that money went. Also, as you're scrolling down on the balance sheet or income statement, it shows you, so we have Disney Plus, ESPN Plus, Hulu is all on there, as well as the parks they have and experiences. So you can look at all the different incomes from all those different streams. It says here in the prior year quarter, the company recorded a 217 million DraftKings loss. That's actually why we're going to look up DraftKings. But before we get to that, I think I found maybe where the cash flow, why we had a significant change. So investments in park resorts and other property, looks like they spent more money this year on that than they did last year by quite a bit, like I'm going to ballpark it, like $1.3 billion more this year than last year. So that would show where that cash went. So those are just important things that I do personally when I'm looking at these income statements. Just kind of make sure things make sense to you and why something may be off or lower than you think it should be. Let's super quick look at DraftKings here. DraftKings is I would say a growth stock, a growth opportunity. Let's call it that. I know a lot of retail people are looking at DraftKings. Anyway, ticker symbol is DKNG. It's 15.14 right now, $15.14. Market cap is 6.79 billion. You can see there's no PE ratio. That means it is not a profitable company, and there's no dividend yield as well. So if you guys don't know a whole lot about DraftKings, as I don't either, I have an idea of it, but in 2018, it became the first legal mobile and online sports betting platform to launch in New Jersey, the first state outside of Nevada to pass sports betting legislation. Anyway, now it operates in a couple other states as well. So basically, it's a sports betting platform. So I'm now at their investor relations page, and this is something you want to see from a non-profitable company. DraftKings thinks that they're going to beat their revenue by $15 million for what the original guidance was for them. And they think that their overall EBITDA is going to be $60 million less than it was. They originally thought they'd maybe lose $860 million this year, but now it looks like $800 million. So those are both really good steps in a good direction. So I'm now here at the net loss area here, where it would sometimes say net income, but right now we're at a losing company's data here. So net loss last year for the 3 months was $305 million. This year they're at $217 million. So that's actually a pretty big gain. So if they were to do that, if you think, if they stay on that type of pace, in a couple of years they'll be profitable. So if they're able to keep that up, they'll become a profitable company. Therefore, I see why people are excited about this company, because that's $80, $90 million change there. So If they can keep that up, they could explode out to a nice growth company. Again, I'm not telling you guys to buy DraftKings, do your own research. And back to our last stock we're going to look at from our original article of the 10 best stocks you should buy right now. They have Boeing on there. Boeing right now is 121.08. Year range is 113 to 233.94. So we're towards the bottom here as well. You can see the market cap is 71.9. And if you look here, that there is no PE ratio. That means Boeing is apparently not a profitable company right now, which I find a little shocking, but let's look at the finances a little bit. So we have here some basic highlights on the business environment. They continue to expect passenger traffic to return to 2019 levels in 23 and 24. So they're hoping that comes back. Macro factors and challenging are inflation, high energy prices, labor constraints, which I'm sure every single company can put in their thing there. Other important things to look at here if you're gonna look at buying this company. So you got second quarter financials, you got commercial airplanes, defense, space security, global services, cash and debt balances. Anyway, let's go over to the balance sheet. So one of the first things I see here is Boeing recorded positive operating cash flow of 0.1 billion. We were able to generate positive operating cash flow this quarter and remain on track to achieve positive free cash flow for 2022. So that means the first quarter must have been a negative quarter because they don't have a PE ratio. So I have here highlighted the first half, says net earnings / loss. The first half of 2022, they actually lost, looks like $1 billion, a little over $1 billion. This quarter, they made 160 million. So it says down here they think they'll be able to come back positive this year. So that's something to look at. I personally am not going to buy Boeing. I understand, if we go into a war or something like that, Boeing would probably do pretty well. They got a lot of government backing, contract stuff like that. But I personally am not going to be buying Boeing. But anyway, that's something for you guys to look into a little more. If you guys have liked this content, please consider subscribing, smash the like button, leave a comment down below if you think any of these stocks are worth buying, or if you already own some of these stocks. Let me know if there's any stocks you guys want me to look into with you guys. And I hope you guys are having a wonderful day, and I'll talk to you later.